What is up everyone, and welcome to today's new video, where in this one I'm showing you the secret I learned from the 2022 mentorship around episode 5, and it really opened my eyes to why certain highs and lows don't get traded to and then we reverse from what seems like a random point. Now this video will go over that secret that ICT reveals that you might have missed. So diving straight into it, I want to get started by explaining what the secret actually is. So let's just say we have an old high back here in price action, and then this secret is incorporating the 3 drive technique. If you don't know what the 3 drive pattern is, it is 1 drive, a retracement lower, a 2nd drive, a retracement, and then a 3rd drive before reversing and taking out sell side liquidity. Now this secret that ICT reveals is where we can predict where an old high or low won't actually be traded above before reversing. So let's say we are anticipating sells and we've got an old high back here. We have 1 drive up, a retracement, a 2nd drive up, another retracement, and then a 3rd drive up before heading lower, where we don't actually take out this old high. Now once we see the 3 drive pattern occur, we can anticipate that the old high should not or may not be traded to. This is because every time we push higher up past the previous high and then again here, that is tricking retail into the market. And once we have the 3 drive pattern, that is enough for smart money to say, okay, enough retail are in, we can send price in our anticipated actual direction now. So it's the 3 drive pattern into an old high. We don't actually take out the old high or low, of course, and then we actually trade lower from there. That is the secret, and I will show you some good examples of how you can use these in context within your trading to actually frame trades. Now I want to dive straight into the first example, which is a trade I took on US oil today, and this is incorporating a 3 pattern drive to predict that an old high won't be taken out. Now if you look, we are on the daily chart here. We have a fair value gap inside here between these 3 candles, and the midpoint is somewhere around here. So we traded into the midpoint of the gap. The body of the daily candle closed below the midpoint, which indicated to me that we should head lower. Now I was looking for this to provide an expansion day, and then of course today to expand below the sell side liquidity down here. As you can see, we have failure swings all inside here and low resistance liquidity. So dropping down into the 1 hour chart, which is what I was looking at intraday wise, you can see that we have a fair value gap traded inside here after breaking lower past this old low. We trade back inside the gap, head lower, break again in market structure, and then we trade back into this order block and this fair value gap inside here, head lower. Now for today's price action, you can see we have the old low back here. For today's price action, I was looking for either this gap to be traded to inside here or this order block to hold. Of course you can see now in hindsight that this order block did actually hold, and I took sells from here, which I will throw a profit screenshot of up now, and I want to teach you how I anticipated this gap to stay open and this order block here to actually hold. Now this is of course incorporating the 3 drive technique and the secret from the 2022 mentorship I showed you. Now if we drop down into a 5-minute chart, which is what I used for this intraday, I want to show you this high up here. Now this high over here is the start of our 1 hour fair value gap I just pointed out to you, and I wasn't too sure, once we were trading inside here, I wasn't too sure whether this, which is our hourly order block, or this high, which is the start of the fair value gap, I wasn't sure which one was going to hold for sells. Now, as you all know, the order block actually held and we didn't trade to the high up here. Most of you will notice the pattern here, and of course that is the reason why I predicted this high wouldn't be traded to and the order block should hold, and we did eventually hold and get a displacement lower before giving an OTE entry and then running away to our take profit. Now as soon as I saw this occur, you can see over here we have a high, another drive up, leg down, and then the 3rd drive up. This right here is our 3-drive pattern. Now the 3-drive pattern is best used when we trade into a PD array we're expecting to hold. In this case, we traded into the hourly order block. We had the first drive towards it, a retracement, the second drive into it, a retracement, and at this point, this wasn't enough displacement for me, so I was expecting EVOs to leg up and then take out this high into the fair value gap, then maybe form an entry technique up here. But once we pushed higher and then broke lower with this displacement, I realized that this 3-drive pattern, the secret from the 2022 mentorship, is actually unfolding right now. The secret happened here where we had 3 drives. So we have tricked retail into the market multiple times. That is what smart money are saying. We have tricked retail into the market enough times. We don't need to take it towards this high. This hourly order block can now hold. If you take your Fibonacci from here towards here, you can see that we trade it into the OTE levels, the bodies of the candles respecting the 79% level, and then we trade lower towards the sell side liquidity and the lower back here. This is just one quick example of how we can actually use the 3-drive pattern to predict which highs and lows won't be traded to. In this case, some of you may have been waiting for this high to be traded into before waiting for sells. But of course, I saw this pattern on the 5-minute time frame. Then I saw the displacement, OTE entry, and that was that. Okay, so now as you can see here, we're on the 30-minute EURUSD chart, and I just want to show you another example of how we can use this 2022 mentorship secret to our advantage to predict when we should and shouldn't trade to a high or low. Now you can see here we have this 30-minute fair value gap, and we traded into it once, ran lower. Of course, we have sell side liquidity down here, which is our main target. Now we have this high formed inside the fair value gap. Once we return into the gap, some of you may be waiting for this high to be taken out before looking for the lows back here. Now, if you drop down to the 5-minute chart, you will see a familiar pattern. And you can see we have 1 drive, a 2nd drive. This is a bit choppy, but counts as 1 drive. A 2nd drive retracement lower, and then a 3rd drive. As soon as I see this 3rd drive here, I can anticipate that this high up here should not be traded to and will not be traded to. What confirms this for me? Well, firstly, the 3-drive pattern makes me anticipate it, and then what confirms it is this move lower. Look how strong the movement lower is as soon as we finish the 3 drives. We induce sellers here, induce them more here, and then take them all out here before heading lower. And as we break lower, you can see the mitigation on this side of the curve is traded into, we take sells from there, targeting these lows. Now this is just one example of how you can use this to our advantage. Many times you will see this occur in the market and notice that a lot of your highs or lows that you predicted to be taken out will not be taken out, and you will notice the 3-drive pattern right below them. You can also use this 3-drive pattern for your take profits. Let's say you were in a buy from back here, for example. Let's say you bought this candle here, you had your stop loss below the low, and then your take profit was this high, as that makes the most sense. As we all know, liquidity rests above the highs, so that would be a logical take profit. However, as you're monitoring the trade and you're inside the trade here, once you see 1 drive up, a 2nd drive up, and then the 3rd drive fails to get above the high, I would collapse the trade once the bodies close inside here. So I would collapse the trade there and take your 1 to 3, simply because we see the 3-drive pattern in towards the high, and that tells us the confirmation that that high may or may not hold. It very well may not, because of the drive pattern. Sometimes you will see this high actually traded into, which is fine, but it is a nice confluence to tell us, okay, price may reverse from this point, and it did. Of course, if you stayed in this trade, I'm sure you wouldn't be too happy. So that is just another way of how we can use the secret from the 2022 mentorship to our advantage. Now that should bring us to the end of this video. If you did enjoy, please do leave a like so we boost the algorithm and I can reach more people with this content. If you are enjoying the content, most of you who are watching are not actually subscribed. So if you are enjoying the content, please do subscribe, turn on post notifications so you don't miss a video. And my socials are linked in the description below. So yeah, thank you for watching. I'll catch you in the next one.